Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Hey everyone! Welcome back to another exciting episode of Tech and Investment News. I'm Joy, and today we've got some absolutely mind-blowing stories from the tech world that are reshaping how we think about the future. From massive AI deals that could power entire cities to stock market records being smashed left and right, and some pretty surprising CEO changes that sent stocks soaring. We're covering it all. So grab your coffee, settle in, and let's dive into what's moving the markets and changing our world.
Joy Up Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours.
Let's kick things off with some fantastic news from Wall Street. Both the S&P 500 and NASDAQ just hit brand new all-time highs, and tech stocks are absolutely on fire right now. Think of it like this. If the stock market were a video game, tech companies just unlocked a new level. Oracle stock jumped an incredible 36% in just one day. That's like if your favorite pizza place suddenly became 36% more popular overnight. Everyone wants a slice. But here's what's really interesting. While tech stocks are dancing like they're at the world's best party, other sectors are just sitting quietly at their tables, barely moving. It's like having one corner of the party absolutely rocking while the rest of the room is having polite conversation. The reason for all this excitement? Well, that brings us to our next big story. Okay, prepare to have your mind blown. OpenAI just signed a deal with Oracle worth $300 billion. Yes, you heard that right, $300 billion with a B. To put this in perspective, that's enough money to buy about 200 million new iPhones, or enough to feed a small country for years. This isn't just any ordinary business deal. This is like watching someone rent out the equivalent of 2 Hoover dams worth of electricity. The craziest part? This AI system needs 4.5 gigawatts of power. That's enough electricity to power about 4 million homes. If we used all that power for air conditioning instead, we could probably cool down an entire major city during summer. But here's the thing about AI. It's like having a super smart assistant who never sleeps, never takes coffee breaks, and never stops thinking. The downside? This assistant has a massive electricity bill. It's like having the world's most brilliant employee who forgot to turn off all the lights in the office. Forever. What this really shows us is how serious companies are getting about AI. They're betting the farm, or in this case, hundreds of billions of dollars, that artificial intelligence is going to change everything. Now let's talk about TSMC, the company that makes the tiny chips that power pretty much everything electronic in your life. According to Bernstein analysts, their third quarter revenue is expected to beat targets by 8%. Think of TSMC like a super specialized bakery that makes the most important ingredient for all the world's digital devices. When they say they're selling 8% more than expected, that's like our bakery saying they sold 108 loaves instead of their usual 100. Sounds small, right? But when you're dealing with billions of dollars, that small increase is actually huge money. What's really smart about TSMC is they're not putting all their eggs in the AI basket. Sure, AI is hot right now, but they're also serving other markets that are bouncing back. It's like running a restaurant that doesn't just serve one popular dish, they've got a full menu. So even if people get tired of the trendy item, they've still got plenty of other delicious options. The company is planning to raise prices by 5 to 10% for their most advanced 5nm chips next year. Now, before you panic about your next phone getting more expensive, remember this is pretty normal in tech. It's like how premium coffee shops charge more than regular ones. When you're getting the absolute best quality, you pay a premium for it. Here's something that might surprise you. Amazon is making a serious play for this $600 billion fresh grocery market. Morgan Stanley thinks they could really shake things up here. Imagine Amazon as a delivery expert who suddenly realizes, hey, we're already driving to everyone's house anyway, why don't we bring them fresh groceries too? It's actually pretty genius when you think about it. They've already got the trucks, the drivers who know every neighborhood, and the technology to make it all work smoothly. But here's the challenge. The grocery game isn't easy. They're going up against veterans like Walmart, Kroger, and Instacart, who've been perfecting this for decades. It's like being a great cook deciding to compete on a TV cooking show against professional chefs. You might have amazing ingredients and fancy equipment, but experience counts a lot. Amazon isn't stopping there, though. They're also working on virtual reality glasses, codenamed Jayhawk, that could change how we shop entirely. Imagine trying on clothes, testing furniture in your living room, or even walking through a grocery store, all from your couch. It sounds like science fiction, but it's getting closer to reality every day. Now here's a story that shows just how much faith investors put in leadership. Opendoor, a real estate technology company, announced a new CEO named Kaz Najatian from Shopify, and their stock shot up 37% in a single day. This is like a sports team that's been struggling all season suddenly getting a star coach. Fans immediately start believing again, even before they see the first game. But get this, Opendoor's journey has been quite the roller coaster. Back in June, the company was worth only about $400 million. Today, after this CEO announcement and some other positive developments, they're valued at around $6 billion. That's like a stock that fell from $1,000 to $67 and then climbed all the way back up to $1,000 again. Talk about giving investors heart palpitations. Najatian brings experience from Shopify, where he learned how to manage massive e-commerce platforms. The thinking is that buying and selling houses could become as smooth as buying anything else online. Instead of months of paperwork and stress, imagine clicking Buy House as easily as you'd buy a book on Amazon. Let's talk about some economic news that actually made people happy for once. The Producer Price Index, PPI, came in lower than expected, dropping 0.1% monthly and only rising 2.6% annually. Think of inflation like the temperature in a room that's been uncomfortably hot. This news is like someone finally opening a window and letting in some cool air. It's not freezing cold yet, but everyone can breathe a little easier. Why does this matter for investors? Well, when inflation cools down, it makes it more likely that the Federal Reserve will cut interest rates. Lower interest rates are like a store having a big sale. Suddenly, everyone wants to buy more stuff. In the investment world, stuff means stocks, bonds, and other investments. Everyone's now watching for the core CPI data, which is expected to show just a 0.2% monthly increase. If that comes in as predicted, we might see interest rates come down, which would be like adding rocket fuel to this already hot stock market. So, what do all these stories tell us when we put them together? We're living through a massive technological shift, kind of like being passengers on a train that's pulling into a completely new station. There's excitement about where we're going, but also some uncertainty about what we'll find when we get there. The enormous investments in AI show that major companies believe artificial intelligence will change how we live, work, and shop. But with great potential comes great risk. It's like opening the world's largest ice cream shop and betting that summer will last forever. Amazing if you're right, but potentially costly if the weather changes. For everyday investors, this creates both opportunities and challenges. Tech stocks might keep soaring, but they could also face sudden drops if expectations aren't met. Other sectors might offer steadier, if less exciting, returns. The key lessons? Diversification is still important. Don't put all your money in one basket, even if that basket looks really shiny right now. Stay informed about these big trends, but don't make emotional decisions based on daily market movements. And remember, in the tech world, what's true today might change tomorrow. That's a wrap on today's tech and investment update. We've seen record-breaking deals, soaring stock prices, promising earnings forecasts, and leadership changes that are reshaping entire industries. The world of technology and investing moves fast. Sometimes it feels like trying to drink from a fire hose. But by staying informed and thinking long-term, we can all make better decisions about our financial futures. Thanks for joining me today. And remember, whether you're a seasoned investor or just getting started, the most important thing is to keep learning and stay curious about the amazing changes happening all around us. Until next time, keep your eyes on the markets and your feet on the ground. This is Joe. Bye-bye.
All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.